right, hello everyone, and welcome to another Monday morning in the US. It's a great time to be alive, and obviously, it's an interesting time on markets. Today, we cover stocks, we cover commodities, and we cover cryptos in quite a lot of detail, and really break down a whole bunch about what's happening in this market right now. Because, of course, it's starting to turn a little bit sour, a little bit red here into the market open. How's everyone going out there? I hope you're all going well. Got a lot of members coming into the community. Make sure to thumbs up the video as well if you enjoy the content. It does help us out here. Also, there's some links that I've popped in on the right-hand side if you're interested in some of our work. And of course, we're doing a newsletter coming up. So just sign up for those free 3 cheat sheet things and you'll get those. Plus, you'll also get a little newsletter we're going to put out monthly with some helpful data and I think some actionable concepts that you can use to attach to your trading and investment philosophies. So US 100 down, S&P 500 down, gold slightly up, dollar index hitting a critical zone, and in general, a slightly fearful Monday. Do we need to be concerned? Well, I think we need to just break out and understand a few things. There are some trend lines going on. I know everyone's probably shuddering the word trend line. It's a bit scary out there at the moment. But there are some trend lines going on that are very, very interesting. And I think the first one here has got to be the US 100. So this is the Nasdaq. Everybody's been loving the tech. And the tech side had weakened last week. And there was some things we'll kind of break down over here. But I specifically loved the short that came through on Friday. That was a great short. For anyone that got that, congratulations. Actually, very, very nice. Very replicatable concept. And I'm kind of hoping the short does continue. We've now broken underneath this little purple line that I've popped here, which is around 12,454. And I'm looking for the market ideally to move down into this green area. Now, this trend line is hit once, twice, 3 times, 4 times. And in each time, the good thing with trend lines is you're always looking for higher peaks to be formed, okay? Higher peaks and higher troughs. You do not want lower troughs. Once that happens, of course, you're theoretically in a switch towards the downside. So the trend line's still intact. It's a multiple touch. I'm sure a few of you do have things like this on your charts, though I don't see it discussed as much as you would expect. And I like the idea that the markets come down into these zones, hit these previous kind of resistance areas, and possibly even push the narrative down further into this block in here. So for me, I've got this highlighted. I've also got this range highlighted, but I wouldn't discount buyers yet. If sellers do recommence, they push down into these levels, I believe the buyers lurk there. Do we have any people in the chat that are lurking in this area? Day traders, scalpers, anything like that? Any of you lurking around this zone? I think it's an interesting area for buyers, and it will be a market that would go down around another 2%. So that would freak people out. That would push off a lot of that FOMC fluff and move it down. US 100 also, some other things that happened over the last week. We saw some nice little touch highs, kind of got back into these supplies here. Obviously took all of this potential, some people say is inefficiency, and kind of cleaned that up. This was left from, I believe it might have been an inflation number a little while ago or a non-farms number a little while ago. So we've now hit that. And of course, again, look at this key level here that I've got highlighted. You can see all the structure through those zones and why buyers may try to recommence here. Both support resistance traders, supply demand traders, and a whole bunch of other interested parties will be lurking in these areas. Let's move over to the US 500 because this is where, I've stacked some concepts here. I'll just quickly get this to clean it up. And again, US 500 will line up to a degree, but it looks like the US 500, the 40-60 is interesting, down and around these wicks. So will the US 500 hit first early in the session, gap fully, so we have a gap basically that we can then close with a bullish rally? I like the idea this market dumps pre. I would love to see it dump further pre, open up with some obnoxious gap, and then build a structure through the base to fill it later on in the session. That would probably be the better play in terms of what we'd like to see market dynamics do. But yeah, buyers probably recommence around the 40-60. I did post over on our Twitter, so make sure to follow over on Twitter. I posted a whole bunch of things over the weekend. Obviously, forward PEs, very interesting data there. I also posted the high-low expected ranges, and you'll notice here we get this low 406, which actually turns out to be pretty much right on that trend line for the S&P 500. So I think it's a pretty nice technical that could double stack there, and it's all about stacking as much confluence as possible onto a zone. Let's have a look what the chat has to say. Yes, let the pain come. I'm sure a lot of you guys would like that. And Frederick says, good morning, mate. WTI oil is dead. Yeah, that was a pretty significant move. Look, energy and oil, that's something I did want to bring up today. A huge disparity between the two of them. Let's just continue through the process, though. We like to cover the US 100, the Nasdaq, the US 500 first. Then we'll go over to the DXY and our thoughts on that. But I do find the buyers could commit in here. And I haven't changed the potential, and you'll lose your minds if this does happen, the potential thought process behind markets actually doing something like this and then maybe even cleaning this zone for further selling later on. There is a real still case that, well, with bulls, if this market does end up just continuously rallying and rallying and rallying, you cannot discount the idea that a 43.50 plus might be hit, and there's still the potential of bad things to happen. I did some study on the weekend because we were always learning here together, yeah. And if you have a look through a lot of the old sell-offs and the rallies that happened off the old sell-offs, I think most of them stick underneath 25%. Now, during both the 2000 sell-off and 2007, we did see some significant periods where markets went up about 25, 26% a few times, and then actually still were in a bear market. Now, traditionally, a technical analysis approach would be plus 20 means bull. So is it possible to push the extreme narrative? Actually, a 43.50 would put you on the pretty much biggest ever that we've seen during the last kind of recorded history that we've got at the moment. So these are the things that you must always think about in markets. Tony B says, all we can do is adapt, homie, and get better. You're always slightly modifying. The key is to have generally good core principles. So investment principles probably don't need to be modified very often if you've got good ones. Trade principles, especially scalping and day trading, you have to evolve to the market condition. And then I think swing again, less core changes need to be made. But yeah, it's a pretty big thing here. Tony B says, I'd say the squeeze was already on. The squeeze has already happened. This would just be the extreme squeeze situation. So an extreme squeeze would push us in there. But I like to look at evidence in stocks. Specifically, where are we going to look? Well, everybody, we're going to look where you love the stocks, Tesla. Now, I have my little set alert here concept, and there's a reason, because up here is what I would call extreme level 1. Like, this is extreme level. So extreme level was hit. At the same time as it was hit, the Nasdaq made a new high. At the same time the new high was formed with Nasdaq, it instantly rejected, potentially trapping many retail traders into long positions. So there is probably some extreme out there. And I'd like to ask the chat this question. How many of your friends that are now coming back into the market or are already in the market are trapped now in potentially negative positions that they don't want to talk about? I'm always interested in that concept. Potentially. SBNR says potentially. Yeah, well, not most people don't want to talk about being trapped in a position, but I assume that for a lot of people, this area would have been too much and they would have been overcome because it's very aggressive. It's very nasty. You know, if you love your Tesla and you feel like you missed down here, and let's say you took profit at 150 or 145, then you're crying here because you're thinking, oh, I missed this profit. Never do that. I'm here to tell you, it's okay to miss it. It's okay. If you fall in love with a position, or let's say you love Tesla, don't trade Tesla. If you love something, don't trade it, because you aren't being correctly looking at the market and you will make terrible mistakes. You're basically a giant trade investor. I say that a lot on this channel, but there's some big gaps that were left. So there's real potential for those to kind of be reached. Plus, that's a very elongated market. I mean, it's obviously looks like a huge rally. It is, but usually they kind of do this, even if they're legit. Let's have a look what the chat says. Not me this time. I'm getting more disciplined. Good work, Louisa. That's awesome. Mo says several people. Gary says, I don't have friends. What's that? Is the video a bit blurry? No, I deleted my Twitter account. And Hello World says, stupid Tesla. And Hello World says, also Tesla drives me nuts. Yes. Well, this particular position, of course, can set you, through some serious action. To put it in perspective, let's have a look at some of the wins and losses here. Just so you can see, again, on Twitter, follow it at FX Evolution if you're interested. Let's put it in perspective. Shopify lost 84.8% peak to trough. It's up 106%. Wow, that's pretty good, yeah. But it's still down 68.7%. So everyone goes, wow, look at these percentages. They're so huge. Very few people bought the bottom correctly, though. They would have been dollar cost averaging into these positions and stuffing it up. So, yeah, 53% down still, from those top areas. Not saying anyone got the top, but it puts it in a bit of perspective of where these crazy percentages are and actually how much they were down. So Tesla first up as a kind of hit and run. Potentially that's a hit and run market where the market has pushed the narrative into the supply and potentially run it. Now, if we go to, let's say, that kind of crazy 4350 zone, where would we want to be setting some alerts? Up here would make some sense, possibly even a push into this. And they would be what we would call extreme level 2, so E2, and we'd call it E3. So at the moment, we definitely hit E1, no doubt about it. Let's now push over to Apple. Did Apple hit an E1? Yes, it did. Because we went up into these criticals. So I'd say we definitely did. Now, second one and third one would be here, which would correspond to those Tesla moves if they occurred. So we've got our E2 kind of level and E3 level. And you'd be corresponding those ideally to S&P 500 and Nasdaq levels. So these are the big tech stocks. I heard that Tesla, the options trade, someone mentioned this to me that I think was from CBOE, and someone can correct me in the chat, wasn't something like 13% of all options volume through Tesla last week? I'm pretty sure it is. Patrick Van Beryl says, if you have a 10-year outlook, would you go into the market or would you dollar cost average for the next year or hedge your positions? I would apply a strategy where you use a certain amount of fear, e.g. a VIX hitting a level, and then apply that with the TA level, and then apply that with some kind of fundamental metric, and then I would stack. And then I buy those particular areas. That's my own opinion. Now, dollar cost average has never been proven incorrect if you're buying quality, theoretically. However, yeah, it just depends which one you like. I like stacking 3, 4, 5 reasons and then just basically saying, okay, well, do I have an optimistic outcome or not? It does pay to be an optimist in markets, guys. I mean, we're seeing it right now. I generally am very optimistic. I still believe the US will go into recession. And I still think that theoretically, if things play out the way they used to, which is, of course, when you get a pivot, they start rate cutting, usually from the rate cut to basically 1/3 of the way through the rate cut to even half of the way through the rate cut, the market actually drops. So the market usually rallies into a Fed pivot, then it drops, then it rallies through. Now, that's the traditional way it's worked. But of course, nothing's 100% traditional. But I do think the bond market, I'm going to trust the bond market. 50% of all yields inverted. Recession. Did we see the lows? We saw some critical levels from Amazon. We saw some amazing levels from obviously Tesla. We saw some insane levels from Google. So there were great stocks at decent prices. I'm not going to say super cheap. I'm just going to say decent prices for the long-term investor. So number 2, Apple. Did it hit critical? I'd say yes. So far we have Tesla and we have Apple, both hitting some pretty big zones. Let's have a look at the Amazon. It looks absolutely disgusting. Does anyone like the look of that chart on a weekly? If I showed you that weekly and said, take a look at my new stock purchase, would you say, oh Tom, that's really good? Or would you say, are you insane? Which one? I'll read some chat while we figure out, am I insane or is it a great purchase? Tony B says, mine's not blurry, just helping folks say it is. Yeah, yeah. Oh, good. Alexandria says, RK, that'd be a good one if I thought RK was actually good technically. It's pretty bad technical. And it tends to just be, I just use it as more, here's hyperstocks in a nutshell. But you guys want TA and RK? We'll check it out maybe. Are you insane? 50-year horizon, yeah. Well, Amazon weekly looks bad. That's right, Finken. It does look pretty poor. And I will say that this is obviously a strong rejection. It came off a earnings. If we go over to the 2-hour, it obviously, well, it's not even a question. That is an island reversal, gap up, consolidation, gap down. That's what it is. It's an island reversal. I mean, how long does an island reversal need to go for? Well, that's up to your TA. But you would think at this stage, down here actually makes a lot of sense. Tap that trend line it broke out of, hit it on the bottom, make a decision with the previous demand. Might be worthwhile just having alerts set at its key zones. I mean, I'll put one in now. Why not? I'll just chuck it in there. Where's my... No, it's not on there for some reason. But anyway, it doesn't matter. You guys get the idea. So effectively, we have our structural zone, we have our break, we have our island, we have our reverse potential, and we have zones that it could get to. So I would say in terms of Amazon, did it hit critical? Maybe not critical, but it certainly looks horrible. So that's definitely a chart that would go 3 into that case. Now let's have a look at NVIDIA. Now this is where things get really tough, because if you load an NVIDIA chart, it just doesn't look that weak. I mean, I know it should be, and it's going to open down today. You could definitely make a case that this is the key. So that's support, 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 structural setup that led to a pretty big sell-off. And that would also be a supply. So like a drop and a base and a drop. So therefore, that's a supply level that NVIDIA is tapping into. So is it at a critical? Yeah, I guess you could say yes. Has it shown incredible weakness yet? Not really. So even on a weekly, it's barely wicked down. So I would say a interesting level. That's probably not super extreme or anything like that. But there's the stock. Let's check out Microsoft. Did it hit a critical zone? Yes. Does it mean it's over? Not necessarily, but it did break through. It did hit into this area, which was the previous gap. And we've obviously seen the weakness. Now, if we open up down today, 1.22, we go and have a look at a 2-hour. Oh, well, okay. What could this be, chat? Let's see what you guys think. Samuel Champlain says, natural gas is looking very interesting. So interesting, it has me reading comments about natural gas. Okay. Be careful what you search for, Samuel. Yeah, natural gas is, I would say, hitting a zone that just obliterated people. So if you're a capitulation fear trader, it's on those areas. It is on those areas. But it's not called the Widowmaker for no reason. You could have thought about 20% ago it was on areas as well. This to me smells like pretty much everybody would probably think it's bad now. I saw most people like natural gas about 20% ago. Island reversal? Yeah. So if it opens up down, theoretically, Microsoft also looks pretty bad. So again, another stock. We're just going through big stocks to see how they're looking. Over here, we've got Google. Again, doesn't look too fantastic. Weekly did reject. Key level, definitely key level. Pretty similar to NVIDIA on this one. Breaks a lot of trend lines, traps a lot of people into trend line concepts. Breaks horizontal, looks like a breakout. So we are at almost an incredible critical zone. If markets do end up rallying, they probably go a bit more ballistic. They push that 43.50 narrative, something like that on S&P 500. If we get closes above where we had highs of last week, you can't discount it. Anything's possible. I never thought that. If you ask me, I guess what's a good question? If you asked me that Roku would become $500 or whatever it was a stock, I'd say no, it won't because it's crap. It turns out it was crap. If you asked Zoom was going to become worth that much, or at GME was going to hit $400 at 200, I was wanting to short it. I remember I was like, "Ooh," but I got to not do that. I can't go against it now. I might have got ripped apart, yeah. But that's the thing. You don't necessarily know what could be possible. Anything's possible in markets. And if it does happen and you don't understand why, it means that your concept of that particular stock and that particular move is probably wrong. You don't know what's happening. You probably have no edge. I always say this word. If you say the word crazy about a move, you know nothing. Okay? Nothing. You know nothing. That's the problem. And I sometimes I say the word crazy too. It means I probably know nothing about that move. Is this crazy? Not to me. Makes some sense. Looks pretty trappy. So that's one of the big ones. And yes, I'm a bit mean to the old Roku. King's Cosmic says shorting GME the last 16 months was free money. Well, that was just the dying ape, wasn't it? It was like the ape that had the death throes. So yeah, you probably did pretty well. That being said, you had to use options. You had to really pick the one. Jay Bishop says, Tom, did you see the TLT move this AM and the DXY? Look at the combo today. We will. We'll check out both of those. Eugene says, do we always see accumulation distribution or sometimes it just dumps? There's three ways that generally trend ends. Accumulation distribution is certainly one of the main ones. Probably the biggest spot and the slowest. Aditya says, FX Evolution, fear and greed 76. When fall? Well, firstly, fear and greed 76 means not much, really. It just means it's a nice big high number that probably shows you there's a bit of FOMO in the markets. Doesn't mean it's going to fall at all. It could go to 120, even though it probably can't even get off the barometer. But it could go as high as possible, and it still doesn't mean that the market has to fall. You need to be able to spot the timings that it falls. Now, I'm not going to say that I didn't think that the market might fall off at about 4,000. Hey, I'll own it. I thought that the market might fall off at 4,000. So if you're going to short 4,000, let's say, and pick it before the full turn happens, then if you're going to be early, what instrument do you have to use? You have to use options. If you don't use options, you just get your head ripped off. And then you've got to use time. And then you've got to understand, how do you take time without degradation? Because buying a straight put, you're going to get ripped apart. So it's a very, there's different instruments, different timings, different things, even though you might get the level wrong. If you get the level wrong, it goes up 200, 300 points against you, then comes back down a month later and you've got the time, well, you could still make good money. So yeah, that's what the big players do. They don't just sit there on like 3-day options. So let's have a quick look here at natural gas, obviously taking some extreme lows, hitting into an extreme zone. Is it possible to get here? Yes. Do I think that's probable without some build here? Probably no. But it's look, very critical. I'm watching it. I'm watching it, guys. We are paying attention to this as much as we can be. Dylan Kent says, hey, FX, love your memes at the beginning of each video. They're hilarious. Thank you very much. Well, the memes come because of the community. You guys find some good ones. I'm enjoying quite a lot of the memes in the Discord at the moment. I almost posted. I've got a few good crackers for tomorrow's video that have been shared. I like them a lot. All right, let's have a look now at TLT versus the DXY. It's a great combo deal, and we will load both of those together. So let's load TLT first. Have a quick look at TLT. The TLT is weakening 105.75. So we now have a lot of wicks on the weekly. A wick rejection, a wick rejection, a wick rejection. So what I'm going to do is I'm going to set a little level here, and I'll put that in our videos from now on, that if the TLT does make above here, I'm going to say this is a super critical zone. So super critical zone. Here we go. Super critical zone. Because we know there's a lot of wick rejections. So if we get a body through there, sounds like some kind of crime scene. But if we do see a body through this level, then it most likely will move to the next levels of equilibrium, which are up here. So we'll pay attention to that. I've suspected for a while it's a fairly crowded trade. If yields are going back up, which seems to be what the current curve is saying since NFP numbers were so strong. So the data dependent Fed may be seeing some horrible data. If the data shows strength, that means higher yields for longer periods. And when you get that, you end up getting reductions in TLT. Do I still like TLT over 2023 into 2024? It makes logical sense to the current situation in economics. That doesn't mean it's a solicitation to buy or do anything, guys. You make your own decisions. But yes, it does make sense to economics as long as yields end up, and your major theory is that interest rates will be cut in the future. And it also plays into that thought process that if the Fed does pivot in the future, although stocks may fall, theoretically, TLT should benefit from the cuts and the continued weakness. And that's usually been the go-to. Basically, the word crash in markets historically has meant jump into the long duration treasuries. That is, unless there's inflation. Inflation is horrible for these things. Horrible, horrible, horrible. No, no, no. You don't want to be doing that. All right, let's move over to the next one, which is DXY, dollar index. Now, dollar index has been very strong. So I've done some work on this morning. Got that little purpley line kind of sitting around these supply areas. And I'm noticing the DXY very strong, okay? And the fall or the trap that it set down here was super, super sneaky. The weekly now looks like two long leg doji plus a big bullish candle coming off a wick. To me, it looks like it's going bullish now, and the USD trade may be committed towards further buying. For today's session, though, critical level. I would prefer the DXY kind of does this. That would be a very good scenario. There is a possibility that also occurs. I'm going to discount that for now, though. I don't think that's going to be the way it works. So I'm kind of feeling I'm feeling dollar index. I think it is a very interesting trade, but here it's critical resistance. If it just boosts through this, wow, the market is a lot different to what I expected. And that would mean most likely if it just goes ramping back up there, it will only turn when the SP 500 and the Nasdaq hit those kind of key zones that we're talking about. So I'd prefer to see the DXY kind of hover, grab that, come down, short into this area as the S&P 500 maybe floats into that trend line and then starts buying, if that does happen. And then we find out the real truth of whether the stock market wants to absolutely fall off a cliff or whether it's not going to. I think this is the critical zone. So set alerts, be wary of these zones, pay attention to it. That's at least the theory I've got at the moment. Samuel says, natural gas can be a byproduct of drilling. I've worked on natural gas plants, and larger plants have no correlation to oil drilling. Owen says, are people going heavily short now? It's a great question. Let me have a look what the general sentiment is on these ones. All right. So euro, US dollar, no. The crowded trade at the moment is long euro. People cannot handle, obviously. So at the moment, it's crowded trade is long euro, which would mean that, yeah, they're betting on weakness in the US dollar at this stage here. So it's probably why it's trying to push this narrative, probably stealing their stop losses. Let's have a quick look at the euro USD. It's sneaky, sneaky. The market it loves killing everyone's money. Oh yeah, I see. Poor suckers, getting chomped. They are getting the squeeze through. Still in here though, there could be some switches. Look, if it just keeps absolutely getting rejected, that's not going to hurt you unless you're against that. There's no activation towards shorting the DXY right now. That long, as it went through the key level that we spoke about in the Thursday video, was huge. Once that went through, it was on. And of course, non-farms just went bam, bam, bam. That was a really interesting non-farms. Crazy. I'll say this, crazy there in terms of how mad the US economy looks from a jobs perspective. It's on fire. No wonder the Fed did nothing. Bob Masser says, is the level of puts keeping the market from falling? Correct. That is very likely the level of puts. There's still so many puts. So if you know something about seasonality of this time of year or the way markets generally run, the way markets generally run is I'll draw it on a chart here for you guys. So usually most markets kind of start February like this. Oh, actually, I'll show you how they really start. And then they go through like that. This is theoretically around the 16th. And then it's like that to end negative for the month. Okay. That's kind of like a NASDAQ run. That's effectively the normal year of February if you tracked it over 50 years. So what it tends to do is it waits for the expiration. And then if it's going to dump hard, it usually does it. And the reason why the markets are struggling at the moment to fall heavily is because when you start looking at these later dates, so we look at the 17th, my bad. So we look at the 17th, there's 4.2 million units. Thank you very much, Zero, for becoming a new member. Also, a shout out to all of the new members that have joined. Thank you very much for the support recently. I know it's been a tough month, especially if you cut things at like 155 on Tesla or those levels. But there's always a new opportunity. We still need to do oil versus XLE a little bit later on. I'm obviously still, pretty negative on copper as well, which is a discussion point. 27 minutes off the market. So these are the big key levels. Look at the stupid puts. Who is this person? Probably one of the people out there. I'm sure somebody does have puts here. But yeah, still huge levels of puts. And it jumps. It doesn't matter which third week expiration you look at this year. It really falls into these narratives of there's quite a lot of puts through the systems. Look at these ones. But the calls are starting to appear now. Like they weren't there a few weeks ago. So now we've got 420 calls. We've got this rando over here sitting with their 450 calls. Thank you very much. We appreciate your service. Buy more calls. That's what we need them to do if you are bearish. 410 starting to get a big higher. Still very crowded though in the blows. So it's going to be very tough over February and March to truly push the negative narrative. It is very, very tough out there. Thank you very much, Zero. He says your information is well worth the $5 a month. Thank you. Thank you. Yeah, so these levels here in terms of the puts, there's just lots of them. And it doesn't matter. You can go out to April. If we go April, there's still lots of puts. But the unit size does go down, 1.3 million. So it's very tough. Very tough to figure out whether whether they're actually Wall Street's options, whether they're prepared to put like a massive hit on the markets because once they get through February, expire a lot of those worthless. Theoretically, it doesn't matter paying off March. They made so much money. Not every month will not paying off these huge amounts of stacked puts be the thing. You saw that in 2022. There were stacked puts at some locations and the market still fell off. But it is doing a great job of pulling the calls in. And you can see by looking at the 17th that calls started to appear. And when you look at March, you really see those 420s, those 450s, those 410 calls starting to appear in a bigger picture. And that presents the ability for markets to potentially fall off sometime relatively soon if they're going to. And yeah, we're kind of in those levels. All right, let's do a comparison here. And what I'm going to do is load up the old oilage. So we'll firstly we'll do XLE first. Thank you very much, Patrick Van Baal. Appreciate you becoming a new member. Thank you very much for the support. So let's go weekly. Let's have a look at the energy. Now, I think this is a stack trade, as in there's too many people bullish on energy for too long, and there's too much disparity here between this and oil. So if we look at US oil, UBC, you'll notice this. Now, oil theoretically, or at least oil stocks do amazingly well in mostly growth, like inflation environments where inflation is rising. Obviously, a great play, which you've now learnt, I'm sure. And the second thing is they tend to do pretty well in also growing economies. Now, I don't think that we're seeing growing economies. They can do okay in slowing economies, but if we're in true stagflation, actually, who here in the chat thinks we're in stagflation? If you know what that is, who thinks we're in stagflation? Who thinks we're in some kind of crash? Not and crash doesn't necessarily mean like horror show. This whole world's going to explode. By the way, Mo says, I saw a YouTube, they changed how the CPI is calculated. Any input on that? Yeah, well, they love doing that type of stuff. A lot of people say stag. A lot of people say the crash side of things. Crash is difficult because of the puts. Crash doesn't mean the market has to drop. It just means economic activity is horrible and possibly lowering inflation is occurring. So inflation here is probably either sticky or declining. It's unlikely to be like, whoa, out of control again. It's probably sticky, which means higher rates for longer, or declining. So there is a case to be said that energy could do okay, but it won't do anywhere near as well as it was doing, because energy tends to run incredibly well during inflationary growth periods. So is this disparity too much? It's probably the biggest disparity I've seen on oil in a long time. Like if you load a monthly here and we look at the periods of where oil's been, it tends to be that oil has tracked earlier when bad things have happened, and then the stocks have fallen off. I remember this period. It was very brutal for oil stocks. This was the 2015-16 China slowdown. It was really bad. Some like XLE doesn't really do it justice to how bad some stocks did over that time. But yeah, look, this is a big disparity and it is weird. You don't usually see those types of disparities. So when you put it in perspective of recently, huge movement between the two. So does that mean that energy stocks are probably looking a little bit expensive? I would say yes. They don't look cheap. They're cheap by some metrics, but they don't look good when you consider where the oil price is. Let's now get rid of this chart. What do you guys think in the chat, though? Let me know. Let's have a look now at oil itself. Because I must admit, I flipped it a little bit recently. I was, 77 was certainly a flip zone both ways for me. I thought there's a possibility we could get through here. And if we had pulled through that, I really believe these two zones were possible. We obviously didn't. Here we had to say, okay, well, that's cooked. And now we're back down. And the 65 narrative is very, very possible. That was the original narrative we had. There's all these things floating around here. And that pushes us into an extremely good zone for markets. I'm going to set, again, if we were putting alerts, this would be a nice alert to have. So we'll set that one there just in case it does happen. And you'd want one on the top end. So do things change in here? Yeah, very much possibly. This is a good zone for markets. But with copper doing what it's doing, usually that precursors bad stuff for oil. And with copper, we've already analyzed this very strongly off this level. So far proven correctly that that copper is weakening. Copper weakening, it's bad for the economies. It's that simple. It's bad for the economies. It means that the China reopening story is not pushing this growth narrative. Cody Martinez says US begins refilling reserves at $70, so hard to see it drop below that. Yeah, I think it's fair. It's an area where I look. I'm not super short oil anymore like I was. Maybe I was one of the only ones ranting about oil at 120 and 110 and 115. Those areas, I definitely thought oil was overpriced. I liked oil to 75 and 65 a barrel. And now I have to say I'm probably indifferent towards it, but I do think energy stocks are too much considering the oil price. So there's a possibility of some some arb there. And also when I see the copper, I don't like the copper. And that was my strongest trade last week in terms of 2 weeks ago. I crapped on about copper. I still crap on about it. This is probably the chart I'm looking at. And I would like to see what happens when I believe it'll get here. This trend line is hit. So that's not too far away. Pretty critical zone coming up for it. I'm sure we'll talk about it on the channel. Anyway, you're not here, most of you, because you probably don't care about copper. I care about copper. You guys don't care about copper. You're probably here because the market is down. And yes, it is. And yes, we went through some great stuff. So make sure to watch probably the first 5 minutes of this stream onwards to the 15-minute if you want to have a look at those. We will cover them again soon. Let's move over to gold. Critical hit, like in a game. Hits this pretty interesting level that led to a nice movement up. That was on the trend lines we put in. This was when it weakened off. And if gold does strengthen somewhere in here, you'll see I've got a little strong level marker just in case. And I've got alerts at 1910. This is where those sellers could recommence on gold. Now, I've been pretty happy with this move because obviously as of January, the end of January, I tend to say gold's done in my mind. Lunar New Year, all of those types of things tends to hurt gold. And then we got the non-farm payrolls, which shellacked it because raising the rates for longer, gold hates that. It's a currency that doesn't give you sweet money in your bank. So US dollars become way more desired than gold over that period. Good trend line, though, that it's come back to. So for buyers, today's a great, interesting session. DXY, you'll notice, is comboed with this trade. So, yeah, I think a lot of people will see this, but how many people have this on their charts? Let me see what the chat says. Alan Marcero says, I care about copper, Tom. Thank you very much. Partheed says, Barber to 95. Not even sure where Barber is. Barely even look at it. I just know CQQQ is sitting around that resistance zone. I started listening to your video and I like them very much. Appreciate it, man. The hardware store sells copper. That's good. Well, maybe the price in the hardware store will get cheaper for you, Lance. Darboy says the whole stream is just as important as the 5 to 15-minute mark, Tom. Yeah, no worries, man. Most people just prefer the US 500. I make a lot of videos for you guys and I make a lot of videos in general. I did make a variety stream because I would get bored otherwise. Sometimes the main markets are a little boring. Right now, they're certainly not, but sometimes they are. And at that point, that's when you go out and you have a look at some other things, some bonds, some Chinese stocks, some Indian stocks, I don't know, some emerging markets. We could do anything. So there's always opportunity. Well, speaking of that, we'll do crypto in a few minutes because we've got the Bitcoins coming on down. Let's have a look at the silver because the silver actually, I believe, distributed. Critical zone. Big take. Look at this. So evil. The algorithms are so evil. Look at them. Is that a little old UTAD? Terrible. Terrible distribution. Kind of plays into that weakness we're seeing throughout potentially energy. We're seeing it through copper. This looks pretty nasty. Non-farms did some real damage to a lot of these stocks, or in this case, this metal. So we had that beautiful build through silver. Then we saw it rally. Then we saw it struggle for a long time as gold kind of flew higher. And this is, again, often silver is corresponding with economic health. So if an economy looks good and we're thinking, yeah, everything's recovering, fantastic, we often see silver kind of front loading a lot of that, like we had over here. Big silver run front loads it. So silver will have these little kind of economic runs and look really strong. But now it's starting to look a lot weaker. And I don't really like this chart. It doesn't fill me with super bullish silver feelings. And we might cover that on the channel tomorrow. Let's have a look at Bitcoin now. And we'll go into the daily. Notice, again, critical zone for Bitcoin. Gets into this structural box. Kind of makes dulls up. Doesn't mean you should short a dulling market. You shouldn't. There's a shooting star here, so that's their rejection wick. I have an alert higher if it was going to hit a super extreme. And I also like this level. So again, this week, I'm not really bearish on Bitcoin until you get under here. I've said it on record that I thought Bitcoin would do the 11.5, 9.5 dance in the future. Obviously, anyone that bought it at 15, 16, I don't blame you at all. It's getting close enough percentage wise. The only reason we even get 11.5 and 9.5 is because previous crashes went between 83% and 86%. So if we take top to bottom, we end up getting a range like that. But not everything is the same. So when you start getting those kind of negative 80s, which I think we tapped, I don't blame the long bull enthusiast on Bitcoin wanting a little bit of the piece. But at this stage, we're not seeing weakness that's telling us that further bad things are happening. And I kind of expect Bitcoin to hit these levels if the S&P 500 hits the zone, which is that 40, 60 zone. Ahmed says the chat GPT pump mania is crazy. AI, BuzzFeed, etc. will end in tears. I would say so, yes. It's probably why NVIDIA's chart makes less sense as well. Qubit says harmonics for life. Oh, yeah, harmonics are okay, but very, very difficult for short-term trading, in my opinion. They kind of give you confidence to hold positionals for longer, which is kind of nice. Shane Durgy says, speaking of Indian stocks, INDA is exhausted. Let's have a quick look. I think it's super overpriced, like market right now. Too many people see it as a big thing. It looks like a giant head and shoulders, doesn't it? Yeah, there's the head, there's the right. Does look really gross. Yeah, that looks pretty bad. Looks bad. Kind of looks like it comes down. What's the Nifty doing? Nifty's so overpriced, guys. Look at this. The hell? Damn Nifty. Yeah, the old Nifty 50 is still so strong, but that other one, yeah, looked terrible on the chart. This, Qubit says yes, great for swing plays, the big CD legs or pattern completions. They can be added with everything. Like anything, you add them together, it's pretty good. Kevin says whatever it is, GDP, whatever it is Skynet. Yeah, I know a lot of people are super excited about AI, but I'd love to ask the chat here. Do you guys like Chat GPT or whatever it is and what it means for the world? Or are you like, a bit scared of it? I'll admit, even though I like technology a lot, personally, I'm not a huge fan of the AI revolution from from what I think it's going to do to humankind. I kind of see AI mostly as a very scary power technique for governments of the world. Let's just say that's how I see it anyway. Because the problem with human nature is we always tend to use it in those ways. You might be like, oh, it's going to be fantastic, but it turns out to be literally the Terminator. It is Skynet. All right, so let's see what people think. Olin says, I think it's bad, but it's inevitable. Yep. Sensational George says it's useful, but very limited. And Qubit says exactly what's going to eventually happen. Chat GPT is eventually going to outtrade us. Yep, you need to realize that. I estimate that it's probably already completely in the systems. I mean, the algorithms are AI, but I do believe it's probably my calc on when it completely destroys the system is like 20 years at this stage, but I'm sure 20 to 30 years. Todd says AI I think is interesting and okay. Todd, do you like the Terminator, Todd? I thought Google was Skynet, says Cold Steel. I know Todd. I'm pretty sure it's the man from we from our conferences. Speaking of which, guys, we will be doing a conference in the US this year. I'll announce dates very soon. So that's going to be super interesting. We're about 9 minutes off. So it's time for us to go back through the US markets. Thank you to the 1,400 people that are joining us. If you like AI or hate AI, click the like button. Therefore, everyone does. And yeah, it'll help a lot with the Google algorithm, if you know what I'm saying. Boss says, will AI revolution give us unlimited stim packs? Maybe. Patrick Van Barrel says, don't forget it's a language mod and the data is sometimes false. Yeah, well, that's true. At the moment it is. John Galt, $5. Looking at HYG, I just don't think junk bonds are going to hold up. What do you think? Well, yeah, HYG was a great compound. I kind of said I'm not super fond of it this year in terms of last year, but it was a great technique. I've got a little area here that we used during 2022. We saw things like, island reversals and rejections early. We do have this little nasty kind of false break potential. And this stacks with those concepts you mentioned before, which is TLT and Tesla, Apple, Amazon, Google, Nvidia, all hitting criticals, US 100 hitting criticals. And they all kind of did these things. They all did these gap ups, FOMO out of their minds, gap downs. We are where we are right now. I'm probably liking to see HYG underneath here. And then if it drops and the market's hovering or coiling and we're seeing defensive market positioning, I mean, that's the thing. We haven't seen one day of defensive marketing positioning, maybe one day. So if we look up maybe here, we'll get the heat map out for a second here. Percentage, 5 days, day, market cap. So the only bullish areas, we had a little bit of pharmacy, which has been dumped recently. Yeah. So if you look at this on Friday, we didn't really have strong rotation into defensives. We had like 0.2% downs and yeah, it wasn't really strong. So I would like to see the market today and maybe the next day actually rotate into defensive stocks. And I'm talking, I want to see some XLP. I want to see some XLV, some XLU. Like, give us some action here, guys. Because we get that, then we can say, okay, cool. At least we know the bigger traders, the bigger investors are starting to stack up. Now, why does that actually mean it? It's because traditionally they can't get out of the market fully. They have to be mandated to be invested with their cash. That's what hedge funds and big players have to do. They set mandates. We're going to be invested 70% or 80% in the market. They can't leave to go in cash, so they have to go into defensives. And that's why you have to watch the defensives. It was probably the biggest clue that January was going to continue. I use XLY versus XLY versus XLP a lot because we want to see consumer discretionary versus staples. And that showed us that big growth. We load that on a chart right now. You just load it like this, by the way, slash and then put it in. You can see that there is, that big blow away kind of huge rally. And then we want to see this weaken. I want this to weaken. And at the moment, it's just been bull, 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 bull. No weakening. That basically means when this thing goes hyper, your beautiful tech stocks and all of your crazy, hyper growth stocks and everything like that you guys like out there, they tend to rally massive when these types of things go hard. And you can see exactly the same thing happen during 2020 bull rally. This is a very good combo. It shows the American consumer, and it kind of just shows whether the market thinks the American consumer is back or not. That is not really a normalized move. It reminds me of a stim pack move, like when the Fed pushed over here. But again, traditionally, when you come off bottoms, this is a more traditional bottoming process for this indicator. Up, big, huge rally, FOMO in, everyone like, yeah, look at me, so good. Comes down, and then it goes through. Right now, where do we sit? wow, look at me, so good. But we haven't had the come down, hard decisions need to be made kind of discussion. Miguel says, what are your thoughts on Meta and Tesla? We did Tesla before. Correction or continuation? Oh, I think, look, Tesla hit one of my critical levels. I believe from that zone it was short. So far it's down. It's not down huge, but yeah, there's some gaps left in Tesla. I did it before. Let's have a look at Meta. Then we'll go over S&P 500 and Nasdaq into today. We're about 3 minutes off the market, so we'll speed up. Here's the Meta that no one can understand. A lot of people messaged me about this one. It went up a lot. Obviously, that'll happen when you give everybody free money. So you've got massive sackings, restructurings, more sackings. The market loves a good sack, like people being sacked. So if you ever see, markets go like this. Everything gets collapsed on. That forces the company to restructure. They fire a bunch of people. They fire more people and they say, we're going to restructure. That's usually more of a go signal for markets. I don't really have too much of an opinion on this. It's probably a guess at the moment, but I wouldn't mind to see it just structure, maybe even hold today's session and then gap down. And then we can say, okay, cool. We go to fill at least the 20% down. Cold steel, $5. Can you have a look at CVNA and GNS? Oh, we'll do that after the open, man. Thank you very much, Cold Steel, as usual. So US 500 coming into today. Our thought process is pretty standard. We have both the Nasdaq, which I'll load next to this right now. A lot of people seem to be messaging me saying, is the VIX broken? I'm not really too sure what they mean by that. It's not broken. We're trading inside. I don't know why everyone thinks the VIX is so broken. Actually, I don't get it. The daily options may have a massive effect on it, but it shouldn't spike when we've traded in a range, which we've still been in for ages. Like, why would it spike heavily through that? Here is the trend line on the NAS. Obviously, that's that 12,200. Underneath that 12,000 could be an interesting level to set alerts for should we see further selling. The 40-60 zone is very interesting to the S&P 500. So we're about 1 minute off the open, guys, but I like that level down here. I would like, even if there's a rally to fill gaps, I would like to see the market go down here. And I would prefer that the market just sells off, leaves the gap, which is the difference between, of course, the Friday close and the current market, and then gives you an easier buy into the opportunity. Because, of course, down here, well, what would you be doing? Filling. At the moment, leading into this market, it seems to be trying to get a rally on. But if it does fall into these zones, certainly areas to look at, apply your systems. I'm not soliciting you to buy or sell. Just remember that. It's just key levels that I think are technically here. So here we go, guys. The countdown begins. We've got 10 seconds till the best market in the world opens Monday morning. And it's down 0.63% on the SPY. Here we go. We're off to the races, and we see markets basically opening about 0.6 down, 0.8 on the US 100. We have some notable moves in the dollar index, which has gone up pretty strongly throughout the session, and Apple ends up down 1.39. We have Amazon continuing a little bit of weakness, but basically flat now, 0.26. And then we got Google down, the biggest here of the big ones, 2%. So that's probably the big move. Most markets rallying early. We'll put in the actual gap fill. Remember, the first hour is where retail traders generally trade. So it's Monday, and it is what it is. So gap fill will be 41.38. That's going to be a level that you'll wish to if you're a bear, you're going to be wanting to spot that level, and that will force us into, let's have a look here. Yeah, so that'll get our gap filled, and that'll force us into some structure. So if you're feeling bearish, this could be an interesting zone to potentially see structural sells. The market is still theoretically bullish. So we don't know that this is all fully going to destroy itself. We have inklings, which is Amazon Island reversal, Tesla's steel, all of those types of things. But to navigate these, the markets do go up here. very interesting zone. If the markets just end up selling off in a few minutes' time and they go down to those 40, 60s, I think that's an interesting zone for buyers of the dip. Damien says, can you use the actual futures contract rather than US 500? Yeah, I mean, I can. You're talking about ES. It doesn't really matter to me. I've done a poll on it, though. Most people prefer the US 500. I understand you may prefer the futures contract. It is good to do the TA on both if you're a SPY trader. Kevin says, right now, this could just be a gap fill from a couple of days ago. Q is above its hourly 50. Yeah, well, and you've also got some other things as well. Like if you go over here, another reason why I like down in these zones for the SPY, and maybe it takes a little bit of time, because we do have 20 moving averages and some other things sitting around there. Thea says, are you going to short Tesla? What it says. So 196 on Tesla at the moment. Look, the reaction you're looking for is around this 200 zone. So 199, whatever. That's going to be where you're looking for those shorties. You're going against trend though, so you can't do it with the. If you do it with the futures contract, you really have to be careful. So will this actually trigger my alert correctly? Because you'll notice, oh, we're so close. Geez, you see that little spike then? The rest of the markets didn't really go up that much, but you saw a little Tesla trade. This is heavily purchased. It was 13% of options traded were on Tesla. Holy moly. Retail is mad. This is the wildest stock out there at the moment because there are so many calls going in on Tesla. I did some of those before. All right, let's do CBNA. I might watch Tesla on the ride actually, just because I'm interested to see if it goes for that level. So Carvana, do I usually do analysis on this? Not really. Let's have a look. Squeezed up, probably hit what I would consider first targeting. This is a pretty good level to be targeted off on. If you are very, very bullish on, I mean, I just think it hit resistance, to be honest. CBNA hit that pretty nicely. If you think it's still long for whatever reason, you'd be targeting in here. I think it's a very dangerous stock though. And for me, geez, if I had the opportunity of dumping it there, I would have dumped it here though. I'll be honest. I'd dumped it where it is now. If I was in that, I'd be like, bye, see ya. But if you like it and you believe it's got legs, then 40s and 60s would be the next zones. But you must clear this high here, and you must get a bullish close above it. So US 100 is now down 0.55. Initial rally slightly being faded. Interesting, the Russell 2000 is the most heavily faded. I want to look at structure on Tesla, small time frame. Let's go 10. Okay, so it comes back up and tests this. Oh, it's a very serious test of that little high take, which I think just hit my alerts at 199. So yeah, it's a very important level for Tesla to sell here. And if it does just spike it again, then watch that kind of, initial, how it reacts around this 200, super important. Finken79 says Tesla is still at investment levels, in my opinion. Yeah, well, it's tons cheap. It's still down 50% off the other high. If you believe in the AI side of it, which is a partially part of the drive here, then yeah, for sure, it's one of those levels. I'm not like when you're talking about like I say, shorting Tesla zone or anything, doesn't mean I think it's going to 60 and 40 and 12 and all of those things. I'm talking about intraday kind of things because you're at critical levels. So there's a big difference between me being a hater. Remember, I own one of these things. I do own the old Tesla, but I would say don't put the 20 in whatever they are, the big wheels. The big wheels, pretty hard ride, guys. It's not a good ride. Not a good ride. Mostly retail still piling in on Tesla. Yeah, retail love it. They're all over the calls. Chart Junkie says took profits at Tesla at 168. Hey, profits are profits, Chart Junkie. If you took profits there Do not cry, man. It's look, this is what I don't understand about traders sometimes. They see the future, they can't handle it. I remember when I used to do a lot of puts and calls for people, and this was always the common thing. So let's say your plan when you got into a stock was you would enter it at $20. Let's just say you had a concept where you would then cover it at $24. All right. That was your plan. That was your plan. You cover it at $24. You put it on a 3-month cover. 2 months into the cover, it's at $28. Okay. You made a mistake. You fixed your risk. You couldn't make any more than the 24 plus the premium. And you still had 2 months to go. What do you think most people did? Oh, I was $28 now. I want the $4. Well, no, you can't get the $4. You got it covered. But I want the $4. You can't have it. You cannot have the $4. It doesn't exist. You're not going to get it. You got 80 cents because you got 80 cents for the 3 months or whatever. You know what? You got the premium. Yeah, you got the 24 plus the premium. That's what you got. And they went ballistic. And I was just like, you guys are stupid. Like, what's wrong with you? Idiots. Because they could now see the $28. I mean, it's ridiculous. This is a very bad candle for Tesla if it does close like that. Anthony Phillips says, you're talking about me. This is general human nature because you can see the future. I knew that was going to happen. You told me it would stop at 24. You don't want it to stop at 24. You want it to go to $100 million. So your covered call expires, the whole thing goes, and you're like, yeah. Charles Gibby says, the smart ones turned around and sold a put at 24. You could have done that too. But that's look, it's common nature of humanity, unfortunately. We when we can see something, only when you're hardened into doing it for a long time do you tend to actually realize that this was my plan, stick to the plan. Chart Junkie had 168, good work. If you rode that from 120, better work. If you realized at $100 puts that everyone was not dumbass, even better work. Remember, there were so many people trying to sell or trying to buy puts at $100 on Tesla. We saw it on this channel. It was ballistic. They were going ballistic. Well, they're not coming out and saying anything. Oh, because they forgot about it. They already lost that money. They went to calls at 150 and then tried to ride it up. You had a plan. You stuck with it. You executed the plan. Good work. You kicked ass. That's why you'll stay in the game longer than everyone else. Anyway, it's just my rant. Chart Junkie says from 115, good. You did damn good. Christian Poleski says, I'm short Tesla at 170. You think I'm good in the medium term? You could certainly be quite good. But again, how much time did you give it? How'd you do it? Did you buy a straight put? That's dangerous because you're going to burn so much money through the erosion of time and the massive IV you would have paid. Christopher Weltman says, when I see cheap Tesla, I buy. Yeah, because you're investing in it. Which is fine. Nothing wrong with it. But different things, yeah. That's the problem with running a channel. Like, what are you guys thinking? I probably have to say, this is the investment philosophy. This is the swing philosophy. This is the trade philosophy. Each one. $40.60 for tomorrow. Your thoughts? You're probably not giving it the adequate time, but yeah, I mean, it depends what it pays off. Ratios, everything, man. 40.60 puts but you're not going to. It's not going to be under 40.60, so you'd want to spread it. But the thing is, well, unlikely to be under 40.60. So therefore, you would spread it to create ratio. Options is ratio game. I put 1% down. I put $1,000 down. How much ratio am I going to get with your plan? What did the poll come out to earlier? Actually, I didn't really show too much bullish or bearish sentiment, so we can do the poll still. Let's do the poll to end up the show. Guys, vote. We've got a lot of you here. We need to see the vote. How do I do this? Start a poll. Here we go. Now is a good time to insert ads. Thank you, Google. I always forget to do that. Never insert ads. And also, for anyone out there, you don't want to live stream, okay? Don't start a live stream channel. It will not work out for you. It's not, go Twitch or whatever. All right, here we go. Okay, here we go. And I'll answer the other question, which was from Cold Steel. He wanted GNS. It was like the GNN. I thought I was going to say, isn't that dead? What is this thing? What the hell? 30 cents to 7. Is this some weird thing? Oh, look, I'm going to say what I always say here. I think it's impossible to chart these correctly. You're trading human psychology. It's a 145 million company. It had a big rally. Maybe it's in AI. I don't know. It's a mega squeeze looking thing. That's correct. I mean, what? Let the chat can decide. So I'm going to show the chat some different. You guys can look at this and you can tell me which. Cold Steel wants to know what you think, not what I think, what you think, because my thought process is whatever. So here's where we are. The daily. There we go. There's your daily. So you can decide whether you would. Do you want to buy this? Do you want to buy the dip? Do you want to get the hell rid of it? Okay, there you go. So you got your 2 hour, your daily, and your weekly. I'm not putting any indicators on it. Gambling? I agree with that comment. If you hate sleeping, that's a great chart. Yeah, that's the kind of one. I remember, I'll tell you a story here to finish. So in 2017, I know this to be true too. There was this guy about, I think it's like October 2017. You can already tell what it's doing. He gets hold. He finds out about Bitcoin CFDs. So this guy, this guy loads everything he's got, 100,000 straight into an account. In one weekend, I don't think he traded in October and November, but in November, the market, it started to rally. And I think it went from like whatever it was, like 8, 9, 10K, something like that. So over the weekend, he got stuck into a buy. 100%, all the max leverage that he could get, he went a whole 100K in, and he didn't know that CFDs freeze on the weekend in Bitcoin. So it obviously froze. He couldn't trade it because you couldn't trade it over the weekend. And he supposedly did not sleep for 48 hours or like the whole time, maybe 50 hours, 60 hours. He watched this thing go up and down thousands of dollars, like in terms of the thing, which was like hundreds of thousands of dollars to his account because he was over 10 to 1. On the Monday morning, it opens. He's up $1 million. He closes it, withdraws everything, and then never trades again. Supposedly, he said it was the worst weekend of his life, and yet the best weekend of his life. The stress, he said, would put 10 years on him. So that's GNS. Now, what he did after that, I'm sure he came back, put another couple of $100,000 and lost it all. Of course, that was probably the truth of what he ended up doing. But I like to believe that he sailed off into the sunset with his Bitcoin profits, YOLO'd that stuff into some kind of house and a nice car, bought a nice watch, maybe a Patek. So he made money there as well. And yeah, he bought some Tesla shares. Wouldn't that be cool? Okay, Chaz says, who the hell would do that? You underestimate people. There'd be someone in this chat that's a YOLO master. I met a few people in our community that are YOLO AMC GME people. Don't worry about that. They're not really putting Hello Kitty to shame, but I'll say this. They were up the millions of bucks. There's a few sneaky ones out there. I know there are. I've talked to them. A few sneaky couple of mil earned off 10, 20, 30,000. But, you know, the story's always the same. make the sweet mills, then lose it all because they did it the wrong way. And unfortunately, that tends to be that. Now, I like to believe the Bitcoin master that didn't know what he was doing, he kept it. That's what we want to see. Only need one good call, says Laurie Lemper, or you just need one great weekend where Bitcoin doubles in a weekend, and then you freak out, and then I think a few days later it like crashed. Kevin says Tom is going to do that when he goes to Vegas. Nah, I have a rule with these places, these devil casinos. The money is lost upon approaching the casino. In my mind, it's fixed. You double, you leave. And then you have a great night. And I like it to be 20 minutes or less. Can anyone guess if I ever do go to a casino, which is very rare, but if I do, how fast, what game do you think I play? I'm sure everybody there will know what I play. Everyone in the chat knows. Then we'll finish the poll here. You can all guess what it's going to be. So you guys are 67% bear. Wow, that's a lot more bear than I thought. 68% bear. Holy moly. Either you're really smart or the bull is very strong in this market right now. Oh, darts. That'd be pretty cool. Probably throw the dart at someone. Craps. Blackjack, craps, roulette. Definitely not roulette. With the roulette, I hate the 00. I don't know if they have that in America, but I can say this. The 00 is a scam. And whenever you see the scam 00, I can't even bring myself to put $1 on that table. So yeah, you guys got it right. Predominantly, it's blackjack. Now, poker, you can never go fast enough. Remember, for 20 minutes or less, guys. John Glassy, $10. Hi, Tom. After studying FXE, did okay in 2022, all things considered. That's good. I'm glad you did okay. It's a tough year, so if you did okay, that's good. UK stocks good this year, like Rolls-Royce, and Germans like Fraport. Stateside now looking at Shopify, Lyft, and maybe Zoom. Your thoughts? Okay, have a look. Zoom. Thought it was dead. No. So a lot of people looking at this stock, theoretically, it hasn't actually run like the others, but I'm a shoot. But look, I mean that theoretically also is an like an island weakness kind of thought process here. I'm not too big on the old Zoom. Let's have a look at the volume. I usually like to use volume when you've been building for a while. So the volume daily. Is it high? Is it low? Pretty normal. Trend line. You could make arguments for a whole bunch of different trend lines, I guess. Gap, obviously, here. If the market does rally, Zoom could be a candidate. I don't think it's going much lower. I'm not sure if it's going much higher. Now, Lyft, what's that? Is that like delivery foods? I hate those businesses. Is this a delivery food or is this an Uber? I dislike both of those types of businesses. Perfect. Like they always go bust. Technically did do a breakout. Obviously, you got the trend line break. Very similar to the other stocks. Coming off pretty big base. It's been in the market long enough because I don't like buying IPOs. So obviously, I always wait 12 to 18 months. Notice where it ends up being. Yeah, it's okay. I mean, it's got a breakout. It's still very cheap in comparison to where it has been. It's up 70%. Probably burns a bunch of cash. I would want to look at the fundamentals of that business. I wouldn't buy it otherwise. Now, Shop, on the other hand, has pretty good technicals. That's a fairly significant breakout. And I think if we do get pullbacks, this built correctly, that's a correct build. Huge volume transactions, massive volume transactions. It's really cheap in comparison to where it was. They did a deal with Google, I believe. It is an inverse head and shoulders. If it does pull back to these neckline areas, which seems very possible, that's the critical zone. So, yeah, I don't mind Shop. I think Shop's probably the strongest technical. And a Rolls-Royce, which I think is RR. Rolls-Royce, is it this one? On the London Stock Exchange? Maybe it's this one. Again, pretty nice inverse head and shoulders. Pretty nice breakout. Kind of looking like maybe a little head and shoulders here. could weaken, then strengthen. And that would be the way I'd like to play something like Rolls-Royce and others. But yeah, I don't have too much opinion on Lyft. Jazz Evo says SPX sucks so bad right now. RR.Al, is it? Oh, who knows which one it is? Same thing. Okay. Yeah. Look, kind of hovering on that, I think, turnaround to the downside. It's pretty critical hits. If it gets underneath here, it should weaken further, and I think then pick it at those levels we talked about before. NVIDIA's been looking strong. NVIDIA looks insane. All these AI plays, and NVIDIA's a very strong AI play. It was probably my number one AI play. Look, I didn't expect NVIDIA to be this strong. But this whole chat GPT thing's got people going mental. Look, AI is almost running kind of like a metal would. Like if you see when lithium goes nuts, the AI stocks are doing that at the moment. No worries, Deborah Smith. Thank you very much. Tom, what are the next short-term supports on natural gas? Oh, pretty low, man. Underneath this level, oh, well, you've got a little tap that could go through 2279, which also comes with a nice little previous demand block. So that's interesting, 2.271. And then underneath that, unfortunately, it's pain train, serious pain train, which will push you into that 160 area. Look, it's a widow maker, guys. It's not good. It's a bad, it's an evil thing. I mean, it's up. It's been down now 76%, and basically the 20 moving average is like here. So it's super far away. If anything, it's proven that this is what extreme markets can do. So you got to be really careful out there in markets. All right, well, we've done some great coverage today. I hope you've enjoyed the show. Hopefully, it's a little bit better than it normally has been. I'm going to finish up by clicking this button because I like to see all of the different rotationals that are going on for the day. It looks like people like partially defensive stocks. Yeah. Utilities are up, and pharmacy, and soft drinks, depression food. That's usually the types of things that the nice evil Wall Street like to move into when they dump things. So we'll see whether this continues. Obviously, thank you so much for your support so far in 2023. A quick reminder, follow us over on our socials. Click the link on the right. Everyone seems to be bearish here on the channel, 67% bears this week. We do have those 40-60 zones, which could be very interesting. Put on your trend lines on your Nasdaq, on your S&P 500. And look, I do kind of hope the market's going to pull back here, because the alternative, if we go through those highs, could be a pretty brutalized 43.50. And then you have to start going, is this actually a real bottoming of markets? I don't tend to still think so, but it's always really tough. The best thing to do if you're an investor, because remember, traders don't care. See, that's the thing. You shouldn't care at all, and you absolutely don't care. You're just looking for the next opportunity that's statistically likely. But the investor part of you can't handle it. So make sure you build a system that when fear hits the streets in the future, you buy the things you want with the systems that you want, with the applications, and you basically scale into those concepts or whatever the hell you're going to do. Because if you don't do it that way, you'll always just sit there like stressing out, and it'll ruin your trades and it will impact everything, and then you'll YOLO everything and then lose it all, like that weird Bitcoin guy. So good luck out there. Have a great week. Thank you to the thousands of people that have joined us today. We'll see you tomorrow for the close, or Monday evening for the close in the US. I keep forgetting it's 2 o'clock in the morning here in Australia. And also, don't live in Australia if you trade the American market during daylight savings. All right. Catch everybody. Bye for now. See ya.